My buddy's birthday is April 1st, or April Fool's Day, and he's asked me to take a look at Apple. So, as a birthday gift, I'm going to do an analysis on Apple stock. And so we have here a court jester who's holding an Apple phone. However, my analysis is no joke. Recently, Goldman Sachs came out with a report, and they stated that iPhone demand expectations for March and June are already weak, but we believe that early quarter one demand indications suggest even lower actual numbers than consensus is modeling. We are slightly reducing our March unit expectations and make a larger reduction in our June quarter unit forecast. We now model 1 million units of inventory build into June, which is atypical. This leaves Apple with material channel inventory to clear in June to prepare for the launch of new products this fall. We also are trimming our replacement rate expectations looking forward in response to what has been weak replacement consumer behavior this cycle. Looking forward, we are also reducing replacement rate expectations, which brings our fiscal 2019 and 2020 unit forecast down by 4% and 1.8% respectively to 224 million and 223 million units. And finally, Goldman says that they've cut their neutral rated Apple price target by $2 to $159 per share. And that is the second lowest on the street. So let's take a look. And this chart here is Goldman Sachs expectations for iPhone replacement rate, which peaked in fiscal 2015 and has been declining each year since. And I think that's the theme that we'll find here in other indications. Let's go to the next chart. And this chart here is a revenue comparison of Apple, Google, and Microsoft from 2008 through 2017, presented by Statista. And Statista is a valuable resource when taking a look at some of the major companies. And as we see here, Apple, which is in the blue, similar to the previous chart, looks like it peaked in 2015 with total revenues at $233 billion. Moving down into 2017, revenues were $229 billion, with expectations for a further decline into 2018. Again, this is the overall revenue. Let's go to the next chart. And this chart here is also from Statista, shows the net income for Apple from 2005 through 2017. And similar to the other two charts, it looks like the peak for Apple was in 2015 for the net income at $53.39 billion, moving down to $48.35 billion in 2017, and a further decline expected in 2018. And this chart here is the Swiss National Bank holdings of Apple stock. And as of the third quarter 2017, the Swiss National Bank held 19.2 million shares of Apple stock. And that is a value of over $3.2 billion. Now, the fourth quarter 2017 information should be out here shortly. I don't have any expectations of any decrease. If anything, there's going to be a slight increase in their holdings. And one reason why the Swiss National Bank continues to aggressively buy Apple shares is due to the so-called magic of indexing, which means that the more others buy Apple, then the more Swiss Central Bank has to buy, sending Apple's stock price even higher. So it's essentially in a positive feedback loop. So two things that you have to keep in mind. Number one is that the Swiss National Bank prints their money for free. So essentially, they print the money and then they buy Apple stock or any other stock on the American exchanges that they desire. But they print the money for free. So $3.2 billion is free. A pretty good gig if you can get it. And the next thing to remember is that when there is a decline in the stock price on Apple, this holding could unwind rapidly. Let's go to the price chart. And this first chart I want to start out with is Apple on a 6-month daily, and the symbol is AAPL. And I just wanted to show you this real briefly and give my buddy a reminder that I gave him a phone call right there. It was a Tuesday morning when the stock was near its all-time high. And I left a message and I told him, sell your Apple shares and don't look back. He didn't answer, so I had to leave a message. Did he sell? I don't think so. But it's not all bad news because I think you're going to have another potential selling point coming up here in the next few weeks. Looking here just simply at the price chart, you can see the congestion here above the 165 level, and that to me is indicating a turnaround. And we see that here in the MACD with a little bit of improvement here. The fast line, I think the fast line is going to start going sideways here prior to moving up through the slow line. And I think that's going to take probably a week, maybe a little bit longer. But we can see that improvement here on the histogram with the bottoming process happening already here, not unlike it did back here. Moving through into the momentum indicator, much the same. You can see that improvement. The price rate of change as well. I think the fast line is going to move through the slow line again here in the next week or so. Moving through here to the RSI, we're at 39.67, relatively weak, but we do see the bottom here and improvement there. Going to the stochastics, much the same. I think this is going to be very similar to what we saw here in early February. Again, fast line is going to move through the slow line in not too long. Volume looks fine, and the William looks like much the others, the bottoming and then the upward progress. Moving back up here to the price chart. I don't know exactly where the price is going to go. I think it's going to attempt a rally. Whether that gets to the previous high or not, it will give you another attempt at selling this stock. Is it going to get you the high? I don't know, but it's going to get you close enough. And if it's close enough for me, it's close enough for horseshoes and should be good enough for you. So when I make that next phone call, answer the phone. Let's go to the long-term chart. So one may ask the question, why am I thinking that Apple is near a top? Well, the brief fundamental analysis that we went through shows to me that both revenue and earnings are declining. That's not a good sign. But you go back into history and we've got some very similar time frames where the stock topped and headed down here in 2012, here in 2015, and I think we're starting to show that here in 2017 into 2018. And we can see here at the MACD that the fast line has turned down. That doesn't necessarily mean it's going to slice on through like it did in these previous two periods, but I think the probabilities are higher that that's what it's going to do. The histogram shows much the same. We got the topping process here and here and here. You have had several months of forecast showing that the stock may be breaking down. In your momentum indicator, you can see much the same, as well as in the price rate of change, the fast line moving through the slow line here just recently. The relative strength, again, you have had a decline in the relative strength for much of 2017 into 2018. This has forecast to you that the price is going to break down. It's just a question of when, and I think we're getting close. Looking at the stochastics, we had a nice move here, very long. It shortened during this move here, and it got even shorter here. So I expect this to be relatively short as well. Into the volume, you can see that the volume has been declining for several years. It's not necessarily a good sign. The Williams, again, a breakdown. You can see that happening for much of 2017 into 2018. Back up to the price chart. There you see it again. But let's go into a little bit more depth on a different chart on a weekly basis. So this chart here is the 15-year monthly chart on Apple. Gives you a slightly different perspective on the price chart, but we're not going to spend our time there. We're going to go down here looking at the MACD. You can see on the MACD the decline from early 2017, forecasting a breakdown, kind of like this here. Not all that similar, but gives you the indication here. Same on the histogram into the momentum indicator. Not much there, but I think you get the idea, certainly with this lower low here as opposed to here or here, that things are breaking down. Into the price rate of change, somewhat the same as the previous oscillator. Moving here into the relative strength index, this is where I'll spend a little bit of time. And if you remember from bridge over troubled water, we've got these points here, 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 and then beginning here. And you can see that the strength moves up, it tops out, and then it weakens. Strengthens, tops out, and weakens. Same thing here. So you can just follow these patterns, and they happen over and over again, particularly on Apple. Not necessarily every stock, but much the same here, looking at the stochastics. And when you take these patterns and you look at the historical pattern, you go back and you can see that we're definitely in the fourth quarter or even the ninth inning of this ball game. And so at that point, I kind of want to get up out of my seat knowing what the score is going to be and head for my car so I can head home. And I think it's about time to do that for Apple. So I'd like to say happy birthday, buddy. Take care. April Fools. But this is no joke. I think that for Apple, it's time for you to leave. And for the rest of you, that's ChewDog Charts. Thank you.